Good day everyone, and welcome to my YouTube channel at Illumination of NG. Don't forget to click on the notification bell so that you can be notified whenever I drop a new video. So also subscribe to the channel and share the videos with your friends and your colleagues. So today we're going to be looking at contract costing and accounting. So when we talk about contract costing, we're talking about the cost identification, okay? That is identification of cost incurred while executing a contract. We have the contractor and the contractee. But what we need to understand in contract costing is that it is a specific order costing. It is a specific order costing, just like job costing. But contract costing, unlike a job costing, is for a long term. It is carried out for more than 1 year, and it is also site-based contract. Okay, that is the contractor will move to the site where he is expected to execute the contract, and this has to be site-based. Okay, because it can be involved. It can involve, the erection of buildings or infrastructures. Okay, and it is for a long period of time. Okay, so, and also in recognition of profit recognition is based on the architect valuation certificate. Okay, so in contract costing, we're going to be looking at some objectives. So we're going to be looking at the definition of contract costing. We're going to be looking at the peculiar features of contract costing and a whole lot of others as we progress in this video. So what is contract costing? So contract costing, as I explained earlier, is a form of specific order costing that is used for large jobs that require a long period of time or a long duration. Okay, and this is peculiar and quite different from job costing, because it is applied where work is executed under a specific contract for a customer, the contractee. Now, what we're saying is that just like job costing, we know that they are both specific order costing, and they are carried out based on the specification of the client. Okay, but contract costing is long-term based, and profit determination differs from job costing. Okay, and that's why we say that unlike job costing, the true challenge is not measuring cost, it is deciding how much profit can be taken on a contract that is still in progress. Okay, now why it is different? Number one is that jobs run long term, often spanning more than one accounting period. That is, contract costing runs for a long period of time, often spanning more than one accounting period. Number two is that work is carried out at the contractee's premises. That is, it must be site-based, unlike job costing, where the customer would have to go to the customers the customer will go to the individual or the company's office or workshop. Okay, to go and carry out the transaction. Okay, so but in this case, work is carried out at the contractee's premises, not in-house. And also it involves specialists. Okay, the task involved in contract costing involves specialists such as plumbing, electrical work, building and the likes. Okay, and also it may be handled by subcontractors. Okay, Now, an architect supervises the work and certifies value for payment. What we're now saying is that before the contractor will be paid, the professional architect, okay, will supervise the work and certify the work to be paid. So, what are the peculiar features of contract costing? So, we've stated four features that distinguish contract costing from ordinary job costing, okay? Number one is the long duration. Jobs are usually of long-term duration, often stretching across more than one accounting period. Number two, it is site-based work, okay? Contracts are frequently carried out at the contractor's premises rather than the contractor's factory. The next one is that subcontractors, specialist work such as plumbing or electrical installation may be assigned to subcontractors. And also, it involves architect's certificate. An architect engaged by the contractee supervises the work and issues a valuation certificate based on the basis for payment. And so, what are the okay? We talk about the peculiar features, and let us look at the real challenges. Okay, so what are the challenges? Now, the challenges is that cost is ascertained simply by aggregating all expenses relating to each contract. Then a contract account is opened for every contract, and expenses are recorded in it as they are incurred. This ascertaining cost is not the real problem, okay, but the real problem is profit on uncompleted contracts, okay. The major challenge in contract costing is calculating how much profit, if any, may be taken on a contract that has reached an advanced stage but is not yet complete. This is why contracts are classified by stage of completion before any profit is recognized. Okay, so what we are saying is that in job costing, in contract costing, one of the issues that we have is having to recognize the profit to be taken on uncompleted contract, because the contract involves stages, okay? And we have three stages, which are the early stage of the contract, the advanced stage, and the nearing completion stage, okay? And we know that full profits can be only recognized when the job has been completed. So at the early stage, which is the first stage, contract has just started or began, okay, and is nowhere near completion. In this stage, no profit is recognized, okay, because you are just starting the contract, okay. And in the second stage, which is the advanced stage, cost to complete not reliable. So at this stage too, we don't even know um, the amount we are going to incur on the contract to completion, okay. So when the contract reach an advanced stage, okay, and the cost cannot be reasonably estimated. That is, the cost of completion of the contract cannot be easily estimated. Okay, this is the second stage, and at this stage, we can still recognize profit. Okay, now the last stage, which is the third stage, is nearing completion. Okay, this is also an advanced stage where cost to complete can be reasonably estimated. Total cost is in sight. Okay, so at this stage, we can easily estimate the total cost that we are likely to incur on the project. So that says one, when the contract is at the early stage, at this stage, you don't recognize any profit. Now, when a contract has just been started and it is not in any way nearing completion, the expenses debited to the contract account are simply carried forward as the cost of the contract, that is, as the cost of work in progress. So, this is treated exactly as the way we treat job costing, that is, debit the contract account with all expenses incurred, carry forward the balances as work in progress as an asset, okay, and no profit is taken because we have to comply with the prudency concept that it takes that we wait for the contract, okay, to progress before we can now decide to start taking a profit. That is stage one. So for stage two, this is a fairly advanced stage, okay, of the contract, whereby we now begin to recognize profit but we have to be conservative, okay, following the prudency concept, okay. So profit is taken is limited to the excess of the architect's value of work certified, okay, over the contractor's cost to date, that is the notional profit, okay, adjusted for cash actually received. Now, what we are saying is that before a contractor can recognize profit, okay, the contractee who gave out the contract, okay, to the contractor, okay, will have to base his judgment to make payment by engaging the work of a specialist who is known as the architect, okay. Now, the architect will value the work done by the contractor, okay, and issue out a certificate showing how advanced the contract has gone and how much to be paid to the contractor, okay, based on the stage of the contract, okay. So before we can begin to take profit here, we have to compare the value of work certified, okay, and the cost of work certified, okay. That is the value of work certified by the architect, okay, and the cost incurred on that work that was certified, okay. Now, for example, what we are saying is that assuming that the contractor incurred the cost of 1 million naira, and at stage two, the valuer now values the cost incurred on that contract, okay, the contract, the level or stage of that contract, okay, on the job, okay, the job that the contractor uh, was able to achieve, okay, or the task that the contractor was able to achieve at the fairly advanced stage, okay, as maybe 3 million naira, okay. Now, this means that the valuation of the architect, okay, is higher than the cost the contractor incurred at that stage. 3 million, 1 million naira from 3 million naira, we still have a 2 million naira balance, which is the notional profit, okay. So the difference between the value of work certified and the cost of work certified is known as the notional profit, okay. So let us know that cost of work certified may differ from the cost to date. Please take note. The cost of work certified may be different from the cost to date, because the cost to date is the cost to complete, okay. The cost to date is the cost to it can be the cost to completion or the current cost incurred, okay, at the stage of that contract, okay. So some costs may relate to work that the architect has not yet certified, okay. Please take note of that. So how do we now calculate this profit to be taken out of what? Out of the notional profit? Because even the profit that we have seen here, okay, we cannot take everything at this second stage, okay. We have to just take a part, okay, a part of the notional profit, because this is a two, so, and we have three stages out, what, 2/3 times the notional profit, okay, that we have been able to determine by comparing the value of work certified with the cost of work certified, okay, times the cash received over value of what, over value of work certified. And the cash received is the cash that must have been paid, okay, maybe from the start of the work, okay, for the contractor to be able to achieve his objectives, okay, as the contract progresses, okay. So, and the value of work, the value of the architect certificate, okay, we're going to now compare that to that. Now, let's assume that right here, okay, so let's just do something. Like, assume that we have here the value of work certified is at this stage, the architect value this work as 2 million. 2 million, okay, and the cost incurred by the contractor was just 1.5 million. Okay, so at the end of the day, our national profit will be what? Will be 500,000 naira. Our national profit will be what? 500,000 naira. Okay, so meaning that at the end of the day, we have a national profit of 500,000 naira. Okay, and now we can now what? We can now decide if we can take profit or not. Now let us assume. Assuming that in this case now, when the contractor started this business, when the contractor started this assignment or project, the contractee only assigned the job to him and promises to pay cash, okay, promises to pay the contractor, okay, but the contractor can use his money to you know continue the business, continue the task, and as it progresses, it's going to pay the contractor back. Okay, this doesn't happen in most cases, but assuming that we have that scenario, okay, that case scenario where we don't have any cash received. So assuming that the question states that well, we have this information that we have here, but for cash received, let's just put that here. Assuming cash received assuming that the cash received, okay, let's assume that the cash received was zero. That is, the contractor was not paid any cash when he started when the work started. Okay, coming. So let me just try and adjust this. Okay, so let us assume. Let me just consider this, and I'll find a way around this later. So let's assume that the cash received. Let's put that here. Assume that the cash received. Okay, the cash received was zero. That is, the contractor have not been paid any cash. So how do we apply that to this formula? We've been given a formula that for us to be able to take profit, it will be two-third times notional profit times cash received over value of work certified. So therefore, two-third of, so what are our notional profit from the calculation? 500,000, okay. Notional profit, okay. So let me take that so that we know that this is notional profit, okay. And what is the cash received there? Cash received there is zero. We're not given anything as cash received, so we have zero as our cash received, okay. So our cash received is zero. And what's the value of work certified? Okay, so the value of work certified there in this case from what we have in the question is 2 million naira. Okay, 2 million naira as the value of work certified. Okay, so when we do this, when we do the computation, okay, at the end of the day, we are going to be having this will now be 0 over 2 1 million is 0. So just take note that is 0. So we now have two-third. We have two-third, okay, of 500,000. That is 500,000, 100,000 multiplied by 2 will give us 1 million divided by 3. That will give us 333,333. So at the end of the day, what we are saying is that when we're done with this competition, out of the 500,000, so the profit to be taken is 333,333. So this is 333,333 as the profit to be taken in this contract. Okay, so assuming again that let's assume that this contractor was already given a cash of 100,000 naira to start with. Okay, to start with, so the the contract, okay, 100,000 naira was what was given as the cash received. Okay, so let's assume that this is 100,000 naira. So 100,000 divided by 2 million. So 100,000, which is the cash that the customer, the contractor received, divided by 2 million, 2 million. So we're going to have 0.05, okay? So that will be 0.05 multiplied by 500,000, multiplied by 500,000, multiplied by 2. So we give us 50,000 divided by 3, divided by 3, divided by 3. So in this case, When the contractor has been given 100,000 naira as a cash to begin the job with, at the end of the day, he will be left with what? Using this formula, will be left with what? Profit to be taken in this case will be profit to be taken will be taken will be 16,666.67. Okay, so this is the amount of profit that what the contractor should take, okay, from this notional profit. So for stage 3, contract nearing completion. Okay, now at this stage where the contract is nearing completion, okay, the total contract cost is now in sight. We can see that we're almost in the process of finishing or completing the project. Okay, so this profit is based on what? On the estimated total profit. Okay, now how do we determine the estimated total profit? Now the estimated total profit is the total contract price plus the cost to date. Okay, cost to completion less estimated total cost. Okay, this will give us what? The estimated total profit. Okay, now the estimated total cost in this case is recognized as the cost to date plus the cost to complete. Because, like I said earlier, that the cost to date can be the cost in the current year or the cost to completion. So, in this case, whereby we have the cost to date at the current year plus the cost incurred to complete the contract, that is our estimated total cost. Again, the estimated total cost is the cost to date plus the cost to completion. Okay, so this will give us what? The estimated total cost. Now, for step 2, how do we determine the profit realized to date? So the profit realized to date is the lower of the value of work certified divided by the total contract price times the estimated total profit. Okay. Now the profit to be realized is what? Is the lower of what? The value of work certified divided by total contract price multiplied by estimated total profit. Okay. And number 2, cost to date, okay, divided by estimated total cost multiplied by the estimated total profit. Okay, so that is the lower of the value of work certified, okay, by the architect, okay, divided by total contract price, okay, multiplied by the estimated total profit, okay, and also the cost to date divided by the estimated total cost multiplied by the estimated total profit. This is what the profit realized to date, okay, the lower of both. Now, for step 3, the profit taken in the current period. How do we determine the profit taken in the current period? The profit taken in the current period is the profit realized to date less profit recognized in the prior period. So the profit taken in the current period is the profit realized to date, then less profit recognized in the prior period. Okay, so the profit that we realized to date, okay, after the completion of the contract, okay, and also the profit that we have recognized in the prior period, okay, that will give us what? The difference between both will give us the profit taken in the current period. Please, foreseeable losses are written off immediately and in full in the period recognized, in line with what? The prudency principle or concept. Okay, an unprofitable contract should not have been accepted in the first place. Take note. An unprofitable contract should not have been accepted in the first place. So, in summary, what we're saying is that for us to be able to determine the expected total profit, this is the combination of the total contract price, the cost to date, the cost to complete, less the estimated total cost. Okay. And for step 2, we're saying that for us to be able to recognize and realize to determine the profit to be realized to date, okay, we have to look at the lower of the value of what's certified divided by total contract price, okay, multiplied by the estimated total profit, okay, or the cost to date divided by the estimated total cost multiplied by the estimated total profit. This will help us to determine the profit realized to date. So in our subsequent video, we're going to be doing some workings or calculations in regards to how to determine all these steps, okay, using the figures or figures that are at our disposal. Okay, so and also for step 3, for you to determine the profit taken in current period, you have to determine the difference between what? The profit realized to date and the profit recognized in prior periods. Okay, so let's look at the um valuing the contract in the balance sheet. Okay, this is the final step. How much is the contractor still entitled to receive? Now, the deduct payments already received from the contractee from the value of the asset created so far by the contract. Okay, The result is the amount the contractor remains entitled to. Shown as a what? A contract value receivable in the balance sheet. Okay, this is the value receivable in the balance sheet. That is that is the contractee is still indebted to the contractor for the remaining sum to balance up. So the contract value for balance sheet is what? Is the total cost incurred to date, add profit taken or realized on the contract. Okay, that is the total value of the contract. Okay, then less, that will give us the total value of the contract, then less cash you see from the contractee, then the value is what we have left. That is, we have recognized our cost incurred to date, and in addition to our profit, is like saying that we have sales equals to what? Profit plus what? Plus the cost price. Okay, so the cost price to the what? To the contractor, you add it and add it to what? To the profit that we have taken from the business. That is the amount that, that we are valuing the contract, which we are selling to the what? To the contractee. So how much has the contractee given us? So if the contractor has given us, assume that we have 1 million naira now are being paid, the cost of 3 million naira we're supposed to pay for the contract, and we have only been paid 1 million naira out of the 3 million naira value of the contract. At the end of the day, we have what? We have a 2 million naira balance that the contractee has not given us, and this is what? This is like a debtors or trade receivable, okay, in our balance sheet. So is the contract value receivable that we are here to what? To receive from the contractor, and this is an asset, okay, which will be transferred to the balance sheet. Okay, so what are the key takeaways? Number one is that cost is easy, aggregate all expense in the contract account as they are incurred. Number two, classify the cost by stage: early, failure, advanced, or near completion before taking any profit. Now, near completion is based a base profit of what? On the estimated total profit, okay, less profit already taken. Now, profit is hard to take, okay, because the real challenge is recognizing profit on incomplete contract, okay. Fairly advanced stage, take two-thirds of the notional profit multiplied by the cash received divided by the value of work certified, and also write off foreseeable losses immediately and report the net amount receivable in the balance sheet. So thank you very much, and in the next video we're going to be doing some calculations in regards to what we have learned here, and also we're going to see how to post this into the balance sheet. So thank you very much, and see you in the next video. Have a nice day.